Alright, so you have been watching a lot of YouTube videos about market structure, but still when you get to the charts, you sometimes doubt your mapping. If that's the case for you, worry less because in today's video, we are going to address that. And so enough with the talking, let's get right into it. Okay, so exactly right here, I can clearly see that price has taken out the major inducement there. So there we have it, our major inducement. Then we can clearly see additional sell side liquidity, but we say that we are only interested by the recently one. I mean the inducement. So once price has taken out the inducement, it doesn't matter how far the price goes taking additional liquidity. All we need to wait is now price to reverse back and break past that swing point high prior to that retracement. I mean this retracement, and of course this is what we'll be calling the bullish break of structure, and this happens after the inducement takeout. So that is the break of structure, and if I am to mark the swing points, of course we can clearly see that the swing point the price broke. This one here is our swing point low, and of course our swing point high is this one here, because we can clearly see price has already taken out the major inducement exactly right there. And we know that after price has taken out the inducement, it doesn't matter how far the price goes lower. In this case, since we are bullish, taking further sell side liquidity, we are only interested with the inducement takeout during market structure mapping. So price has taken out the inducement, the major inducement in this case, additional sell side liquidity, and we can clearly see that move to the upside. And if I continue running price, we can clearly see that price is heading higher, and eventually price made a break of structure exactly right there. So if you have watched my previous video about market structure, you know that I usually confirm this one here as a valid break of structure after price has taken out the inducement. It doesn't matter major or minor, it doesn't matter, and also that retracement should be deep enough. By deep enough, I mean a 50% retracement. If I measure this retracement, we can clearly see that this retracement made it to the 50% of our dealing range exactly right there. So what does this mean? This means that this one here is a strong break of structure. Okay, so right now we are in a new trading range, and this one here is our swing point low or our higher low, this one here. And of course, now this is where we'll be looking forward to, of course, mark our inducement. And in this case, I can clearly see that the inducement is this one, as this one is not a valid pullback. Okay, so let me run price to see if price will create another valid pullback here. And there it is. We can clearly see price created another valid pullback, and we can clearly see price has already taken it out. Okay, let me continue running price. Yeah, you can clearly see exactly right there. Price has taken out that major inducement exactly right there. And this one here is what we call now a swing point high. If now price reverses back and breaks past that swing point, then that will be, of course, a bullish break of structure. But that is if the retracement is deep enough. Okay, so right here, if I continue running price, we can clearly see price headed lower, took this sell side liquidity below here. So some additional sell side liquidity, and price is heading higher. So if I continue running price, we can clearly see price headed all the way, making a break of structure exactly right there. So we can clearly see our first criteria is met exactly right there, inducement takeout. The second criteria, the depth of the retracement. So let's see. If I take this, drag it from that low all the way to that high, we can clearly see that this retracement has made it to the 0.38. You can clearly see right here, 38% retracement. So in this case, is this one here a valid break of structure? As you can clearly see, price has taken out the inducement, but this retracement has yet made it to the 0.5 or the 50%. And we say that the retracement is considered deep enough if it has made it to the 50%. But in this case, we can clearly see price made it to the 38% of this retracement. So now the question is this one here a valid break of structure. Okay guys, so this is what I wanted you guys to take note of. There are exemptions. Sometimes price can take out the inducement, not make it to the 50% of that dealing range, but make it to the 38.2 of that dealing range, or making a 38.2 retracement, and this one here be confirmed as a valid break of structure, both in an uptrend or in a downtrend. And so how do we know if this one here is a valid break of structure? In this case, in a scenario where price has made it to the 38.2 after the inducement takeout. And this is where now the higher time frame comes in play, whereby the logic behind this is a higher time frame valid pullback is a lower time frame complete structure. And if we are to talk about the time frames, then if this here is the lower time frame, then this one here is the higher time frame. We can clearly see the H4 being the lower time frame, the higher time frame is the daily, the M15 being the lower time frame, the H4 is the higher time frame, and the M3 being the lower time frame, then the M15 is the higher time frame. So that's the time frame route you'll be using. Of course, it's just the same as the one we use in top-down analysis. So this means then you don't need to cram all of that. And so back to our scenario here, we can clearly see major inducement takeout, retracement depth 38.2. And so this is where now we say that there are some scenarios whereby price has taken out the major inducement, made it to 38.2, not to the 50% as you have used to, but still this one here considered to be a valid break of structure. How is that considered to be a valid break of structure? If it meets this criteria that a higher time frame valid pullback is a lower time frame complete structure. So since this one here is the 4-hour time frame, then the higher time frame in this case, it will be the daily time frame. So if I get to the daily time frame and I see that this one here is a valid pullback on the daily time frame, then this one here will be a valid break of structure, even though the depth of this retracement has yet made it to the 50%. Okay, so if I get to the daily time frame, exactly right here, we can clearly see that this one here is indeed a valid pullback. And since this here is the higher time frame and this is a valid pullback, then this means that if we get to the 4-hour time frame, that will be a complete structure. And so this means that this one here is of course a valid break of structure, and that is the exemption that I was talking about. So what does this mean? We have just acquired a new trading range, and that is the trading range low. And if I continue running price, we can clearly see price has made inducement here. This is what we call the recently formed valid pullback low. The liquidity resting below there is what we call the major inducement or the inducement liquidity. And if I continue running price, you can clearly see price created another valid pullback there. So this means that our inducement liquidity shifts to this low because this here is the recently formed valid pullback. If I continue running price, you can clearly see price created another valid pullback up here before making that retracement, and price has already taken that. You can clearly see exactly right here that price has already taken that out, and this means that we have our swing point high, of course, right there. And since this one here is our swing point low or our protected low, as long as price is above that, we are still in an uptrend. Okay, so price has taken out the major inducement, and if I drag the fib, of course, from this low all the way to our high there, I mean where the retracement started, we can clearly see price has made it to 0.382. Okay, so but of course you can clearly see it has mitigated a weak POI here. So this means that there is some possibility that this reaction will not make it to the external liquidity and price may continue lower, but let us see. And you can clearly see exactly right there, price headed lower, of course, taking out additional sell side liquidity. And if I continue running price, let's see what price will do here. You can clearly see the reaction failed, but later price is heading higher. So if I continue running price, you can clearly see that price is heading higher and higher. Okay, so let me make this fast so that we get to see what price is doing here. Okay, so price consolidated a little bit there, but eventually, as you can clearly see, price made it to the break of structure. So this here is of no doubt a valid break of structure, because if I drag the fib, of course, from this low all the way to that high, we can clearly see that this here is a deep retracement that is 50% retracement, and so this means that it is of no doubt this one here is a strong break of structure. Of course, this one here is our swing point low, our new swing point low, and this one here is our major inducement. So let me continue running price. Okay, so price made another valid pullback. So this means our inducement liquidity is below that recently formed valid pullback low, that is, and exactly right there price is heading lower. This here is our high currently. So let's see. If I continue running price here, we can clearly see price has taken out the major inducement. Okay, so we can clearly see that price has taken out the major inducement there. So this means that we can confirm our swing point high, of course, exactly right there. As we can clearly see, price has taken out the major inducement. And let me continue running price. Okay, and you can clearly see price respected that and headed higher, exactly right here. So now the question is this one here a valid break of structure? Okay, so we usually confirm the depth of that retracement, and that is of course our first thing we usually use. So we can clearly see exactly right there that the depth of this retracement made it to the 0.382, of which if I am to do this in percentage form, that will be that 8% retracement. You can clearly see price has yet made it to the equilibrium of that dealing range. And so this means that this one here can be a break of structure or not. And so how can we confirm that to be a break of structure? Of course, by diving to the higher time frame. And in this case, since we are in the 4-hour time frame, then we'll be diving to the daily so that we get to see if this one here is, of course, a valid pullback. And if we get to the daily time frame here, we can clearly see that this one here is, of course, a valid pullback. If I get rid of this fib, we can clearly see that this one here is a valid pullback, exactly right there. So this means that on the H4, it is of no doubt that that is, of course, a break of structure. As we can clearly see that price has already taken out the major inducement there, and since the retracement made it to the 38.2, if this here is to be confirmed as a complete structure, it should be a valid pullback on the daily time frame, since this one here is the 4-hour time frame. Okay, so this means that we are in a new trading range, of course, and this one here will be, of course, our swing point low. And if I continue running price here, we can clearly see that, okay, so this one here is our inducement, in this case minor inducement. So let me continue running price. Okay, so it's a minor inducement, and if I continue running price here, we can clearly see price created another valid pullback here. So this means that I'll be shifting, of course, to the recently formed valid pullback, and we can clearly see this retracement is deep. So let's see how deep it is. We can clearly see that if I do this retracement made it to the 0.382, exactly right there. Has it taken out any inducement? We can clearly see no inducement here is taken out. So what does this mean? This means that this one here cannot be confirmed as a valid break of structure. And of course another thing, if I am to use the daily time frame, of course in this case we can clearly see that if I get to the daily time frame here, that this one here is not a valid pullback. We can clearly see that all of these are just insider bars. And what does this mean? This one here is not a complete structure on the 4-hour time frame. And so we have no doubt to say that this one here, okay, so we have no doubt to say that this one here is our major inducement currently. Okay, so that one is our major inducement. Yeah, that's our major inducement. And if I continue running price here, we can clearly see that, okay, so price is heading lower, exactly right there. So this one here is our high currently, and this retracement is of course not to participate because it has probably mitigated a zone that is before the major inducement, and that zone is of course a wick or a smart money trap, or what we call the inducement trap. Of course, if I am to take the reversal, it will be from this extreme order flow here. The reason is to why that's the extreme order flow. We can clearly see that the order flow prior to it is this one here, and this is a mitigated zone, so invalid. And of course, if I continue running price here we can clearly see that price took this major inducement, gave a reaction here, but failed the major inducement sweep. Price is heading towards that extreme order flow, and I'm anticipating that price will be reversing from there. Of course, this one here is our swing point high, and if price reverses and breaks past that, that will be a break of structure, because if I am to measure the depth of this retracement, we can clearly see it has already made it to the 0.5, or it is a 50% retracement. So it is of no doubt that that is, of course, a break of structure if price makes it to that high. And we can clearly see price mitigated this order flow, gave that reaction all the way towards this external liquidity, and that it is, of course, a valid break of structure. So guys, that is what I was to talk about in today's video, that if the retracement has made it to that 8.2 and it has taken out the major inducement, sometimes that can be a break of structure and sometimes that may not. So how do we confirm if that is a valid break of structure or not? You shift to the higher time frame depending with the time frame that you are currently. If on the higher time frame it is a valid pullback, then this means that on the lower time frame it will be a complete structure, even though the retracement didn't make it to the 50%. So if lately you have been struggling with market structure, even after watching my market structure videos, then I believe this here is the missing part. And by incorporating this, by understanding this, you are now a market structure analyst pro. So do me a favor also, drop a like, and I will see you in the next video.